22 lower, and that was September 17th, 2001, the day the markets opened after 9/11. So we have now broken that record. At this point, anything lower than 684 points is the biggest point drop that we've ever seen. Now, that said, Rick, I want to tell you that when you are looking at your investments and you're looking at your 401k, and even when you are a professional investor looking at the markets, the point drop is not the significant part. It's the one that we can follow, but the percentage drop on the Dow is about 6.25% right now. On the S&P, it is almost 8% lower, and the S&P is of greater concern to you than the Dow. At 8%, we are now in the range of one of the top 10 losses on a percentage basis in the history of traded markets. So this is very serious. Now, all of this is to say, Rick, that the markets are not, in fact, the story here today. The stock market can continue to make money, trade up or down. We're back in that minus 700 territory now. The issue here is credit markets are frozen. And credit markets are where the companies that you work for get their short-term money in order to meet operating expenses, including rent and, in some cases, payroll. We are now at the highest point there, 724. That was the biggest loss we've seen today. That is, we are now in historic territory. When credit markets free up, we are not able, some companies may not be able to make their payroll. They may have to shut down a shift at a plant. That means people will lose their jobs, more people will lose their homes, people will have difficulty getting loans. So honestly, Rick, from a financial perspective, this is not a day to dig in on principles. It is reflective of a fundamental lack of understanding on Congress about financial markets, and I understand that, and I understand why there would be a fundamental lack of understanding amongst Americans, because we've never had to deal with this before. We've never understood how financial markets work and how credit markets work. But this, I cannot underscore enough, Rick, how serious an issue this is.
Ali, just in the time that you've been talking, this thing has gone from the 6s into the 700s now. Yeah. Can you give us any historic reference on this?
Yeah, well, listen.
How big is this from, bad days in the past?
Yeah, well, listen, this is the biggest point drop that has ever been seen in a day. We just hit 730 or something. We've never seen that before, first of all, okay? So the biggest drop that we've seen in terms of points at the end of the day.
Wait. When you say we've never seen that before, are you talking about in the history of the market?
In the history of the market. You've never looked at a market at a board and seen 724.24. Never seen that ever before. On September 17th, 2001, we saw 722.11. That was the lowest the market got in point numbers. But again, we only talk in point numbers because that's the thing we see. Let's look at this in percentage terms. We are talking on the S&P 500, a loss of almost 8% in one day. 8% in one day. If you were to get 8% in a year on an investment you had, Rick, I'd say it's not fabulous, but it's a pretty good gain. To lose 8% in one day on a broad range of stocks, 500 stocks, is fairly significant, and that means there's virtually no American who is not feeling this one way or another today in their portfolio, but they're also feeling it because there's pressure on their bank, there's pressure on their CD, their money market. We're not going to lose that money, but you know, when we have to worry about what bank is next, this is not a time to be getting annoyed about whether you didn't like somebody's speech. I just have to implore folks involved to say the world is not coming to an end. It is not Armageddon. For those of you at home, there's no need to panic because there's nothing you can do about this right now. But for those who have the power to do something about this right now, understand that time is of the essence. The credit markets, the ones that your employers use to borrow money from banks and from other companies, are shut down. They are frozen. There is not money flowing between banks and between companies right now.
Well, there's a political side to this and there's an economic side to this. Ali, stand by. I think we're going to have Christine Romans in a minute. We've got reaction coming in from many of the people who are now watching this newscast, thousands and thousands of them. Many of them are quite angry, as you might expect, on both parties, apparently. Look at this. This is from Shock. Let's go ahead and take that. Let's go to our Twitter board. Pelosi was foolish to gloat about a deal not voted on yet, but the GOP is still trying to blame her for their failure. It's ridiculous. Riddle and Chick 23, there were a number of Republicans in support of the package. They're just looking for a scapegoat. All this having to do with what is going on right now between legislators and a lot of finger pointing, as we've been alluding to. Let's go to Susan Lesovich now. She's also following the markets for us. Susan.